Hey everyone, welcome to another episode of Adam Talks, a podcast that takes an alternative look at retirement. This is Adam Bergman, founder and CEO of IRA Financial. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of Adam Talks. I'm Adam Bergman, tax attorney and founder of IRA Financial. And on today's episode, life-changing new retirement laws. So recently, U.S. Senators Ben Cardin, Democrat of Maryland, and Rob Portman, Republican from Ohio, bipartisan support. Isn't that amazing? Democrats and Republicans working together like the good old days, right? Well, why I love the retirement industry so much is because it's the only industry where there is bipartisan support. Democrats and Republicans agree that saving for retirement is a good thing, and it helps all Americans, Democrats, Republicans, blue, red, everyone, irrespective of religion, ethnicity. It works because it's based off simple mathematics. Your money grows faster without tax. That's called tax deferral and compounding interest. And even our representatives in Washington understand this. So it's really, really refreshing to see the introduction of the Retirement Security and Savings Act that was recently introduced a week ago or so by Senator Cardin and Portman, and there's a really good chance it becomes law potentially by summer or early fall. And this is basically the final piece of Secure Act 2.0, which was reintroduced by Portman and Cardin. Now, Secure Act 1.0 was passed December 2019 and did a lot of great things for retirement, right? It changed the RMD age from 70.5 to 72. It did a lot of stuff for small 401k plans. It did multiple employer plans, making it easier for businesses to adopt 401ks. It did do one itsy bitsy negative thing where it got away with the stretch IRA. Basically, once you pass away and you leave it to a spouse and your spouse passes, or if you leave your IRA to a non-spouse, they got to get rid of it in 10 years, right? Whereas before they had the ability to stretch out their distributions over their life expectancy. So they got rid of the stretch IRA, which is, the only negative part of Secure Act 2.1. But Secure Act 2.0, which was initially passed by Neil Brady in the Ways and Means Committee back in October last year, and kind of just, the election happened and, everything happened in D.C. So now Senators Cardin and Portman reintroduced, and it has a lot of the same stuff as Secure Act 2.0. I'm going to go through it. Some nuggets in here, some really good stuff, and life-changing stuff, actually, and I'll explain why. So just to give you kind of a broad summary of the intent of this bill, and it was, according to the senators, it was a broad set of reforms designed to strengthen Americans' retirement security. The bill addresses four major opportunities in the existing retirement system. One, allowing people who have saved too little to save more aside for their retirement. Two, helping small businesses offer 401ks and other retirement plans. Three, expanding access to retirement saving plans, including for low-income Americans without coverage. And four, providing more certainty and flexibility during Americans' retirement years. So all great things, right? Who disagrees with that? Right? Everyone wants to have more money for retirement. Everyone wants their neighbors and fellow Americans to have more for retirement. So this is a good thing. And it's actually nice to do a podcast. The last podcast I did was on Bitcoin crashing. So this is actually a more positive podcast. And it's a really good bill, actually. There's really nothing in here that I have any issue with. It's a very, very good bill. And I think it's going to pass because the fact that there's bipartisan support. So I'm going to go into detail on some of the important provisions. I'm not going to address a lot of the 401k stuff because it's mostly a solo 401k IRA/alternative assets podcast. So I'm not going to go into detail on all the really interesting 401k provisions, but I'm going to touch on a few. So the first one is it establishes a new automatic enrollment for Safe Harbor, right? Safe Harbor is the most popular type of 401k. You basically get a 3% match if you put in money, or an automatic non-elective match, depending on how your plan is set up with your employer. But under the current law, there's a 3% salary deferral, and there's an auto escalation up to 6%. This bill would create a new safe harbor in which the minimum default level of contributions would be 6% in the first year, 7% in the second year, and 8%, and 9%, and 10% in subsequent years. There would be a 10% cap on the default level. So this is going to be interesting for a lot of reasons. It's great for employees. Businesses will struggle with this. They may not love it at first because obviously the more money they pay out in automatic safe harbor contributions, obviously that's less cash flow for the business. Yes, it is tax deductible to the business, but it's cash flow that's leaving their coffers going to their employees. So this again is for automatic enrollment safe harbor. Not everyone does automatic enrollment safe harbor. If you just do a regular safe harbor, you're likely not going to be caught in this provision. But for companies that do the automatic enrollment safe harbor, from the 3 to 6 to 6 to 10, that's a big jump, right? 100% jump. And we'll see how employers feel about that. If some back out of it, it's obviously really good for employees. That's free money. I've done podcasts on this before. If you are working at a business that gives you an employee match, then save through your 401k. You're getting free money. Generally, it's a percentage of your compensation, but in some cases, if you don't put in that 3% minimum, you may not get the match. So ask your administrator, ask what features you have in your 401k, because you could be missing out on free money. Okay, so just be aware of that. Let's see. So the next one I would want to talk about is the Savers Credit. And this bill would make the Savers Credit refundable and require that the credit would be contributed directly to a retirement plan or Roth IRA. So the individual would designate the plan or IRA to receive the contributions, except that no plan or Roth IRA would be required to accept the contribution. So basically the way it works is right now, if you are 18 or over, you're not a dependent, you're not a student, and depending on your adjusted gross income, you could potentially get anywhere from $2,000 a person, $4,000 if married, filed jointly, all the way to $1,000 or $2,000 if you're single, to get free money, basically a credit. So it reduces your taxes, okay? And it's basically if you earn less than anywhere from 39 to 66. Once you're over 66, you're phased out of the credit. But if you're below 39, you basically will be able to get a credit, which is basically the maximum contribution amount that you can get for this credit is basically $4,000. Okay, so basically the way it works is they're incentivizing you to save through an IRA, and they're giving you a credit for what you contribute. This provision is going to say, you know what? Instead of that credit, we're going to give you the money. Okay, we're going to actually give it to you in a Roth IRA, let you save it, which I've been preaching for years. Credits are great, but if you make 40 grand, you're not paying a lot in taxes anyways. So if you can get that money and let it grow in a retirement account, you're 25 or 30, that 2 grand could turn into 100 grand potentially in 30, 40 years. So it's a great provision. It applies, again, only if you make below a certain threshold of income, but it's a good idea, right? The idea is that, hey, instead of just giving you this credit, doesn't have that much value, we're going to give you the cash and you can put it in an IRA or a Roth IRA and let it grow. Question is, will they let you invest in anything you want? Will you be able to pull it? Some of those questions are unanswered, but the thought and I think the intent is very, very positive. Another interesting thing, full-time employees for solo 401ks or 401ks. So before the Secure Act, it was 1,000 hours, right? Secure Act generally required 401ks to have a dual eligibility requirement, in which an employee must complete either 1 year of service, so 1,000 hours, or 3 consecutive years where employees complete at least 500 hours. This bill would reduce the 3 consecutive years to 2. So what that means is it's going to be easier for someone to be eligible, because instead of having to do 1 year of 1,000 or 3 years of 500 hours, now it's 1 year of 1,000, 2 years of 500. So increasing eligibility. Another thing they want to basically say, if you get an inherited IRA, they're going to let you do a 60-day rollover, because there's been some issues where people kind of get the money, they don't know what to do with it, and they trigger a distribution, and there was no intent for non-spousal and IRA. So that will be a good thing as well. This is a hugie. They want to increase the RMD from 72 to 75, right? Pretty good. This would go, this would be big, right? So it would go from 72 to 75 in 2032. Not so fast. The initial bill would have increased it from 72 to 75 in 2030. Okay, so they just increased it from 70.5 to 72 in 2020, right? The Secure Act of 2019 did that. Now they're going to increase it to 75 in 2032. So we're going to have to wait another 11 years. I wish it would be sooner, but it's a good thing, right? The idea is that, hey, people are living longer. If you don't need to pull the money out, then keep having that money grow without tax. So it's a pretty good provision. I like it. I wish it would have started a little earlier, like maybe 28, 27, but it's better than nothing. Okay. Another thing is they want to enhance the startup credit that for companies that start a 401k plan. Basically, they want you to be able to do. You can apply for up to 3 years, and you can get the lesser of 50% of the employer's startup cost to do the plan, and it goes as much as $5,000. And under the bill, 50% would be increased to 75% if you have 25 or less employees. So that's pretty cool, right? You potentially get up to $5,000 credit, not a deduction, but a credit for setting up a 401k. So that can actually cover most of the costs for the 401k and even potentially some of the costs of safe harbors, because you'll be able to reduce your tax by that credit. So again, here's the theme: making it easier for companies to offer plan benefits, giving employees and individuals more incentive to save. All good things. This is another cool option. They want to treat student loan payments as elective deferrals for matching. So instead of under a safe harbor or a 401k where there's matching contributions, where the employer just matches into your 401k, they're going to allow some of that matching to go to pay off student loans, right? And some companies have started doing this. They've gotten special permission, private letter rulings from Department of Labor, IRS, to allow this to happen. But this would apply for 401ks, 403bs, simple IRAs, for qualified student loan payments. So again, more information will be provided as this bill becomes law. But pretty cool, right? Allow some of the matching to be used for student loan payments, which is obviously a major factor, right? It's one of the biggest issues in our country, I think, is the cost of education. It's ridiculous that you have to pay $60,000 to go to college. I mean, it's just embarrassing. The richest country in the world. I mean, I always give this example. I went to McGill, which is, considered a really good school in Canada. I think I paid $1,500 a semester, right? I think my dad told me paid more for kindergarten than college. So that's the way it should be, right? Or something reasonable. You don't have to go bankrupt to go to college. It's ridiculous. So I'm happy they're doing something. I wish they can figure out a way to just reduce tuition, not just give free money, but to just find ways to reduce tuition, because it's just a major issue. Another good thing, they want to index IRA catch-up contribution limits. So under current law, the limit of IRA contributions increased by $1,000. It's not indexed for individuals who have attained 50. The bill would index such limit as regular IRA limit. So potentially we can get more than $1,000 catch-ups, which is nice. This is another biggie, higher catch-up contributions for individuals over 60. So right now, once you're over 50, right, you go from $6,500, $19,500 to $26,000. They want to do this where the catch-up would be $10,000, right? So instead of $19,500 to $26,000, it would be $19,500. If you lose the same numbers, $19,500 to $29,500. And from the simple IRA, from $3,000 to $5,000. Okay, again, giving people a chance to make up for lost time, giving people the ability to save more for retirement, less of a burden on the state, less of a burden on Social Security, give people the power to save more. Yes, we need to do a better job educating people, but this bill has some really good incentives, giving people that, hey, I'm over 50, I have the ability to put in a little bit more, I'm more mature in my economic earning capacity, I want to put away more, I was negligent when I was younger, I can do it. Now the $6,500 is good, but the $10,000 will be better. So kudos to Portman and Cardin, another, I think, really good provision. This is cool. Another one, they're going to let Roths be simples. So right now, if you do a SEP IRA, it's pre-tax. You do a simple IRA, it's pre-tax. They're going to allow Roths to be in simples. So that could really open the simple IRA, become a little more popular. Yes, you can put away less than a 401k, right? It's $13,500 and $3,000 catch up versus a 401k is $19,500 and a $6,500 catch up. 401ks can do pre-tax or Roth. Simples can just do pre-tax, but Simples have less administration costs. The IRA custodian, whether it's Fidelity or IRA Financial, we do the reporting. The 401k, you have to hire a third-party administrator to do it. So if you're in a situation where the highly comps or the executives are okay contributing $13,000 or $16,000, then the simple may make sense for them because the admin costs are much lower. Yes, there's still some matching requirements, lower than the 401k. So here, and you can now do Roth. So, hey, another advantage for the simple down the road. Kudos, again, good provision. This is also cool. They're going to reduce a penalty if you fail to take an RMD because no one told you the right amount. It's going to go from 50% to 25% penalty. So that's good. Another cool provision, if you have less than $100,000 in your IRA or 401k, you don't have to take RMDs. Okay. So the bill would provide that defined contribution plans IRA owners are not required to comply with the RMD if they have a balance in their plans of not more than 100K. And that's going to be indexed for inflation. So again, if you have 50, 60 grand, you want to save, you may not need the money for a number of reasons because you're still working maybe. 75 is not that old now. A lot of people still work at 75 or 72 now, I should say. They're not going to force you to start taking approximately 3% a year and start depleting your retirement plan. So again, another great provision. Love it. Another good provision coming. They want to update IRA rules. So there's some small stuff they want to do, like if you do excess contributions, they were going to reduce the excise tax from 6% to 3%, right? You screw up, you put away too much, they're not going to penalize you as much, which is really good because there's a lot of tax planning that goes into that, especially for Roths, right? You can over contribute, put 100 grand in a Roth instead of 6 or 7 grand and just pay a 3% excise tax every year. Because supposedly on the Roths, the way it works is it's an excise on the contribution, not the earnings. Whereas in the pre-tax IRA, the excise applies to the earnings as well. So there's going to be some tax planning on that. May have to cut that, find a way to limit that opportunity because there'll be a lot of abuse. Another good thing for statutes. I get this question a lot. What's the statute limitation if I do a privilege transaction in IRA? Well, it's generally 3 years, right? It can go potentially to 6 years of substantial understatement penalty. But then the next question is, well, when does it start? I never filed a tax return, right? I never reported anything regarding the privilege transaction. Does the statute ever start? And here they finally said, yeah, it does start. It starts when you do the deed, when you should have filed the return. So that clarifies that issue because a lot of people said, well, is there ever a statute? Because let's say I did a prohibited transaction in 2020, right? I never reported it, never filed any excise tax, never paid any tax because of my prohibited transaction, just filed my regular tax return. Does the statute ever start? And the question is, yeah, it started when you filed that return because you should have declared it. So that clarified some things and made it easier to deal with, which is a good thing. So one other thing is Roth IRAs are exempt again from RMDs. And this is huge. They're going to exempt and include the exemption for Roth 401ks. So that's been a big kind of difference or distinction between a Roth IRA and a Roth 401k. Roth IRAs, like Roth 401ks, 59.5 over 5 years, you open the plan, everything's tax-free. The problem is with a Roth 401k, you actually have to start taking required minimum distributions at 72, whereas a Roth IRA, you don't have to. So what was the simple workaround? Well, just on December 20th, just roll the money in your Roth 401k to your Roth IRA, so you have a zero balance as of December 31, and you have no RMDs. So finally, I think Portman and Cardin just woke up and was like, this is stupid. Why don't you just cut RMDs in a 401k? Because there's a solution anyways and a workaround. It just makes no sense. So let's just eliminate RMDs for all Roths. And they're doing that. So again, kudos to them. Another great provision in this plan. And this is the final, icing on the cake. Another amazing provision. I've been talking about this for years. You can now, if this bill ever gets passed, you can roll Roth IRAs into Roth 401ks. Woohoo! Finally! I've been saying this for years. It makes no sense. Why can you not roll a Roth IRA into a Roth 401k? New laws allow you to roll a Roth 401k into another Roth 401k, so long as your plan allows for it. Why shouldn't you be able to roll a Roth IRA into a Roth 401k? What's the point? Maybe you like the investment opportunities in a Roth 401k, i.e. you want to use leverage to buy real estate. Guess what? If this bill gets passed and this provision becomes part of the bill, we're going to have our dreams answered. You're going to be able to roll Roth IRAs into Roth 401ks. This will create huge real estate tax planning opportunities for investors, because if you have Roth IRAs, you can dump everything into a Roth 401k, super leverage your Roth 401k, never pay any tax, any UBIT tax, which would apply to a Roth IRA, right? Because the exemption for being exempt from UBIT tax of up to 37% on using a non-recourse loan to buy real estate is if you use a 401k versus an IRA. So a lot of real estate investors do their best to try to get into a Roth 401k to get around the UBIT. Unfortunately, a lot of people have Roth IRAs, right? They just, the way they just converted, they have Roth IRAs and they can't do it. They're stuck. The Roth IRA is stuck in the IRA world and they can't move that money into the 401k, take advantage of the exemption under 514c9 and not pay any tax on the UBIT. Now they could. So again, there's some great things. I couldn't ask for a better bill. Some things I would love to add is to get rid of collectibles for IRAs. Like now that the art market is so much more established with auctions and fair pricing, I wish they'd open art to IRAs. I wish they would just include IRAs as part of the exemption for UBIT, like 401ks. That would be another like gift from God if I was just looking at ultimate dream scenarios here for a bill. But I can't complain. Some really good stuff here. I think we're all going to benefit, and I believe that it is life-changing stuff, right? RMDs from 72 to 75, allowing Roth IRAs to go into Roth 401ks, no RMDs for Roth 401ks, no RMDs for IRAs under 100K, simple IRAs being able to offer Roths, allowing higher catch-up contributions over 60 in 401ks from 6,500 to 10K, simple IRA from 3 to 5, indexing IRA catch-up contributions, which should now increase that $1,000 limit in the future, student loan payments, matching contributions, using that to pay off student debt, startup credits for plan payments up to 5K, 3 years in a row. What else was big? And then obviously, if you're doing a automatic credits can now, if you're eligible for a saver's credit, that can actually be contributed to an IRA or 401k instead of just using it to reduce taxes. So some nuggets of gold here, and kudos to Cardin and Portman. I think they've done a fabulous job, and that's why there's bipartisan support. It makes sense. It's good stuff for everyone. Everyone benefits. Everyone wins. If I expect this to have a lot of legs, and it's expected that the Finance Committee will hold retirement hearings potentially this summer and mark up the retirement bill as early as the fall. So hopefully by the fall, before December 31, nice Christmas present, right? If we get this under the Christmas tree, it can make 2022 even better. So all in all, I'm super happy. I've got almost all my dreams answered, wishes. I couldn't have asked for almost anything more. I mean, the Roth stuff, the Roth IRAs, the Roth 401k is huge. No RMDs for Roth 401ks, the 72 to 75, some amazing stuff here. So there you go. It's a really, I think, life-changing legislation that will get passed, guaranteed. I'd say 99% of this bill is the way I've just described it, is the way it will become law, because there's not much objectives on this. It's not paying for anything like the capital gains tax on infrastructure, which we're actually going to learn more about this week, because the Biden administration is going to now have to provide details on how they're going to pay for the infrastructure bill, which we'll go into more details about the increased capital gains rate. I've been talking about over $1 million. Capital gain rates can go up to 40%. Some issues with no step up in basis and reduction in estate tax thresholds, uniform life credit. So we'll should learn more about it this week. But on a side note, this is a great piece of legislation. Secure Act 2.0, I think, will be way better than Secure Act 1.0. I actually don't see anything negative in this, whereas Secure Act 1.0 got rid of the stretch IRA, which I was a big fan of. So really got nothing to complain here. Really like it. The thing that's going to get the most controversy is probably the automatic enrollment safe harbor, going from 3 to 6 to 6 to 10. It's a big jump. So we're going to see the fallout on that with some employers potentially. But otherwise, all in all, super positive. So happy to provide everyone some good information after, especially if you're a crypto investor. It's been a tough couple of weeks going back to Musk and China and all the even more regulation by the US. So it's been a bad couple of weeks for cryptos, and this is a good podcast. I'm happy to do this one. This is fun. This is positive. This is life-changing for most of us. So there you go. I hope I put a smile on your face. I will publish some of this also on our website, so you'll be able to check out the act. You're not going to want to read because it's super long, but I'll drop a summary so you can just review it yourself. And again, it's not law yet. It's going to be law, I think, by fall, late fall, hopefully around Thanksgiving, Christmas. It should get passed. That's what people are expecting in DC. So otherwise, we don't get a lot of these retirement legislations once every few years. The Secure Act was recent, 2019, and that was the biggest one pretty much since I would say 2001. So extra. So this is a biggie. The fact that we're getting this a couple years after Secure Act 1.0 is pretty cool. House and Ways and Means Committee is working together, which is nice to see. I wish some of the other committees in Washington would do the same, because bipartisan is the way to go. It's the only way to get things done. You got to negotiate with the other side. Can't just stay on your corner. We got to work together and make this country even better. And we can do it together. We got the best country, smartest people in it, hardest working people, and we got a lot of great things to do, but we need to work together. So I think the retirement bills are just a really refreshing, rewarding, encouraging sign that we as Americans, if we work together, we can do really, really great things. So thank you again for listening. If you're watching, I appreciate it. And thanks again for all your support. Give us a like, subscribe if you haven't, and I will talk to everyone again next week.